Horlicks Network 18, Mission Poshan, Bhavishya Roshan.
Hi there, you're watching Power Breakfast on CNBC TV18. Just getting a handle on the cues coming in from the Asian markets. In fact, just pull up the Hang Seng as well as the Shanghai Index. Remember, the Asian markets weren't moving much as far as the Nikkei as well as the other indices are concerned. The Hang Seng, however, opened with a gain of 0.3%. The Korean market shut today. Taiwanese as well as the Straits indices should come up for you. The Straits actually is underperforming the Taiwanese index, which has now extended its gain to about 0.5%. The SGX Nifty, no such bearing out there, indicated a cut of 20 points earlier, still indicating a cut of 20 points. The key data point to watch out for today will be the Reserve Bank policy. So the Reserve Bank of India will release its monetary policy today afternoon, and all indications are that a rate hike is coming. Ahead of the big event, Lata Venkatesh joins us now to tell us what is her take. Lata, if the MPC were to propose a rate hike, should we be worried?
Well, the first point I'd like to make is that there's nothing to worry about a rate hike. One, because the hike is coming because there is growth, because the economy is growing so much that excess production, or what you call output gap, has been filled. And now people will start raising prices because demand is more than supply. So it's a good sign that demand is growing. The second reason why we shouldn't worry is because the rate hike is already there in the way bond yields have moved. Most of the banks have already increased their lending rates. So in a way, there is no further worry about a rate hike making matters worse. The second point I want to make is what we should worry about. We should worry about how the voting has happened in the MPC and what the monetary policy statement is saying. First, the voting. If it is, say, 4 in favor of a rate hike and 2 in favor of a pause, then there's really, it's actually a dovish sign. Even if it is 5 in favor of a rate hike and 1 voting for a pause, I wouldn't worry. But if it is 5 voting for a 25 basis rate hike and 1, Dr. Patra, voting for a 50 basis rate hike, then maybe that is a sign that the MPC is a bit aggressive. And finally, what the MPC says in the statement, if it is indicating that this is the start of a tightening cycle and there's more to come, then you would worry about that kind of a statement. Secondly, are they at any point saying that financial conditions have tightened so much that growth is at risk? Then that would be a worry. And thirdly, are they saying anything about the rupee being under threat? Because, you know, the rupiah in Indonesia was under threat and that country had to hike rates. Such statements will not come from the RBI, so not to worry at all. And what next? Of course, after the monetary policy, we will worry about the MPC minutes that will come 20 days later, but that worry for another day.
Okay, all right, Lata, thanks very much for that. Well, let's also listen in to what the CNBC TV18 Citizens MPC or Monetary Policy Committee is expecting from the RBI today.
The inflation story is starting to look really dangerous now. Core inflation continues to work upwards. You know, we are coming into the Kharif season, which is principally a rice growing season. And if the 50% plus MSP is announced, that's going to add another maybe, you know, the rice MSP will go up by about 17 to 18%. So that's going to add another impetus. The rupee is weakening, the oil stays up. So all of those add up to, I think, strong inflation challenges.
Global environment has completely changed in the last couple of months, given the increase we've seen in oil prices along with the stronger dollar, you know, US interest rates moving up, and across emerging markets we've seen pressures come back on the balance of payment front. So, you know, I think from an inflation targeting perspective itself, the changing global environment clearly means an upside risk to the inflation outlook.
Irrespective of whether the RBI gives a signaling device to the market in terms of a rate hike or change unchanged, I think the markets have already factored in and the markets are in a very liquid tight spot. And the bank will continue to raise lending rates irrespective of the RBI signal. The signal to noise ratio, basically the signaling which the RBI gives and the noise which the market emanates in terms of, for example, the volatility in the yield, that has actually been elevated. So I think it will be on the best thing for the RBI to address this signal into noise ratio. Otherwise, this financial instability component which has crept into the market should actually be curbed.
This combination of high growth, high inflation, loose fiscal and weaker currency, in our view, has to be combated to some extent by a tighter monetary policy. Otherwise, you might soon lose the equilibrium path completely. So that's where I guess we'll have to start tracking now that how the fiscal risks from MSP, oil excise duty cut, or GST, how these three particularly pans out to figure out that to what extent we will require somewhat of a tighter monetary policy to combat that.
I think the beauty of a flexible inflation targeting framework is that it imparts some predictability to the process. So far, the RBI has been saying our policy decision will be guided by where inflation is 1 year ahead. Now, purely from a cost push perspective, higher oil prices, a weaker currency, higher food prices that are imminent, and the fact that there's stronger pricing power as witnessed in the core inflation numbers, we can with reasonable confidence forecast that on an as-is, where-is basis, 1 year ahead inflation will be about 5%. If your medium-term target is 4%, it's an early inflation targeting regime, your forecast is 5%, that should be enough for the RBI to tighten monetary policy.
Well, yesterday we saw Vian Industries down 20%. This is after Raj Kundra was summoned by the ED Enforcement Directorate in connection with a Bitcoin scam. Post the questioning last night, let's listen in to what Raj Kundra had to say.
There was no transaction. The case was he is accused in some Bitcoin scam that he's done. He wanted to buy a team in my poker league. We had started a contract with his company. We got into a contract, but because payments didn't come, we had to terminate the contract. And because we terminated the contract, no deal actually happened. But they have a copy of that on email because there was email correspondence between us. So I had to basically correct and rectify and show them everything that this is what has happened. There's no transaction that has happened. And he was terminated from our poker league because of non-payment. So that's what's exactly happening.
All right, so we will keep an eye out on how the street takes this clarification coming in from Raj Kundra. But let's move on. The sugar stocks, they'll be in focus. The Cabinet Committee on Economic Affairs likely to announce relief measures for the sugar sector today. Manisha Gupta joins us with the expectations. Good morning, Manisha.
Hi, thank you so much for that. Well, yes, this is a much-awaited, a cabinet proposal that could be cleared today. And if it is done, then the sugar prices or the sugar industry, for that matter, could actually see some relief coming in. We have seen 20 to 22,000 crores of arrears due on the industry. And with the kind of state that the industry has been, the loans have been difficult to come. The working capital credit line from the banks also is something that the industry has been talking about and difficulty in getting. So what we are looking forward to is a comprehensive plan where you could see 8,000 crores worth of stocks being passed on to the industry in the form of buffer stock creation, in the form of an MSP being created, and of course the ethanol policy, the production and pricing support onto that is a long-term measure. But for the immediate term, it is going to be about the buffer stock and the minimum support prices for sugar. If that comes in as per the industry expectations, you will see some knee-jerk reaction, some support continuing for the sugar sector today.
Okay, and Manisha, what about the rest of the commodity space?
Well, the crude oil prices is one thing that has continued to decline. Some buying on all those dips, but mostly it is lower lows that this sector seems to be creating. There is U.S. asking OPEC to increase supplies. You have seen Chinese inventories continue to gain up. The hedge funds have been cutting their long positions. That money really seems to be, passing over to other commodities. So crude prices really seem to be watching all of those things. But the real action really seems to be emerging in the metal space, where you have the copper prices trading at a 3-month high. You have lead prices trading at a 4-month high. Nickel prices have been running up because of decline in inventory, strong demand, etc. Even zinc prices gained up 2.5% overnight. So metals really is the space that you would want to keep an eye on today. Strong demand, decline in inventory, supply concerns, all of that really seems to be adding premium here.
All right, Manisha, thanks a lot for that. We will keep an eye out on both the sugar as well as the metal space. Crude oil, of course, continues to gain mind space. With that, we'll slip into a short break, come back, we focus on the equity markets, the cues to watch from the futures and option space.
Still tuned into Power Breakfast on CNBC TV18. Let's get a quick handle of what the F&O cues are looking like. Mangla?
Well, after 3 days of decline, Ekta, there have been some stray streaks of optimism in the F&O space. We'll talk about them, but in the meanwhile, by and large, the street is a little cautious because the FIs, they continue to sell in index futures. Yesterday, we saw some purchase. However, in yesterday's trading session, rather day before yesterday, we saw some purchase. In yesterday's trading session, there was 500 crore worth selling, 8,600 shorts added as against 3,850 longs. However, by and large, that also indicated that there was some purchase at the lower levels, given the Nifty futures premium has turned into a 3.3 point premium as against a 30-point discount. So that's telling you that there is some signs of optimism. In index options, yes, the FII sold about 800 crores. They added index calls on the short side, so we should keep an eye out on that. However, there were some punts as well from the upside because they added 6,700 long calls as against 4,850 long puts. So more calls were bought as against more puts, but remember, more calls were sold as well. 10,800 call was the one that saw some bit of selling. 10,700 put has a premium of close to 185, indicating that 10,500 to 10,550 could find some feed. DHFL enters F&O band, keep an eye out on that, and some shorts seen on mid-cap IT stocks.
Okay, all right, Manglam. Thanks very much for that. On that note, we're going to wrap up on Power Breakfast, but we leave you with the picks of our bullseye contestants for day 3 of the week.
Our first call today is a buy call in NCX with stop loss below 778 for target around 855. My second pick is a buy call in RBL Bank with stop loss below 501 for target around 533. My third call is a sell call in GSFC with stop loss above 111.50 for target around 97. And my last call is a sell call in Max Financials with stop loss above 476 for target of 424.
First call for today is on the buy side is IOC, and long positions can be created in this stock, keeping a stop loss of 169.50 for the target of 188. Next stock on the buy side is going to be Marico, and stop loss for Marico has to be maintained at 317.70 for the target of 349. Another stock on the buy side is going to be Bharat Financials, and stop loss for Bharat Financials has to be maintained at 1128 for the target of 1249. And the final call is on the short side is Idea Futures, and one can short Idea Futures at CMP, keeping a stop loss of 57.80 for the target of 51.80.
LIC Housing buy with a stop of 470 for targets of 520. Bank of India buy with a stop of 92 for targets of 104. Marico buy with a stop of 320 for targets of 350. And Reliance Capital buy with a stop of 382 for targets of 420.